Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage, and welcome to another edition of Java with Jared. Once again, happy Friday, everybody. Hope you are doing fantastic. Well, rates finished the week unchanged to maybe slightly worse from where they ended last week. You know, all the news really is around the shutdown, what type of an effect this is going to have on the economy. And with the shutdown happening, I mean, there's just a lot of uncertainty out there. We did see some economic data as it pertains to housing. First of all, we did see existing home sales, and that showed a very large drop. It showed a decrease of 6.4% for December. Expectations were for a decline, but the decline was only 1.6%. So that was a big miss. Now, that was for, again, December, which means that it was for homes that were put under contract right around the October-November time frame. And at that time, that's when interest rates were at their worst levels. You know, since then, things have gotten a lot better. So that big decline could be just primarily due to the fact that interest rates had risen so quick, and the buyers out there just hadn't adjusted for that. And we might see a little bit of a positive increase in the previous or in the next couple of months. We'll wait and see just when rates came back down. So see if some of these buyers that didn't buy and go under contract in October, if they're now going to be closing in January and February. So it's too soon to tell to see if this is a trend or if it was just a blip. But on the other side of that coin, we also did see FHFA, Federal Housing and Finance Authority, come out with their index. And that just measures home sales and appreciation on single-family homes with a conforming loan amount. And that showed that appreciation did increase about 0.4%. So on one side with the existing home sales, it might be showing that there's some weakness to housing, but the FHFA numbers are still showing some pretty good appreciation there. So that's also positive. We'll keep you informed on that. We did also see weekly jobless claims come in with a pretty big number. I usually don't report on this, but it actually was, the weekly jobless claims was the lowest level in 50 years. So that shows that there is some, real health to the job market, as we've seen in a lot of the unemployment numbers and such. But then on the other side of that coin, we also see, well, what is the effect of this slowdown or the government shutdown? Because there's a lot of people who are either not working because they work for the government and they can't come in, or have been asked to come on in and work without a paycheck. So again, a lot of two sides of these coins here. Now, on the global front, we also did see a lot of information showing that there's many global economists who are believing that things are slowing down. We saw Mario Draghi, the ECB chair. He's saying that the risks are weighted for overall global slowdown. International Monetary Fund said the same thing. So there's a lot of drags on the overall global economy as well. Right now, interest rates are kind of at a pivotal level here. Again, we've seen some improvement over the numbers in October. So rates are better now than where they were in October. But we've going to see the Federal Reserve meet next week. We'll also see the jobs numbers. So there's a lot of data next week, and we're at a pivotal level. We are advising our clients, though, still to lock, because the other thing that we are expecting is that once there is a resolution to the government shutdown, we'll probably see a rally in the stock market, now knowing that it's over. I don't think it'll be long-lived, because then there'll be kind of there'll be the initial excitement over that being over. That will cause some interest rates pressure, so rates may decline a little bit. But then the market will just be trying to figure out what is the collateral damage to all this, and will this cause the economy to really show some weakness, and then we might see a reversal of some of that. But we'll keep you informed. So if you have any questions, please give me a call. Again, a jam-packed week next week with the Federal Reserve meeting, jobs number, and then a whole lot of inflationary data. So we'll keep you informed as to what's going on there. Thanks for joining me with Java with Jared. If you have any questions, please give me a call. If you're working this weekend, so are we, and we'll talk to you soon. Bye-bye.